Welcome back to Decrypt with Henry. I'm your host, Lisa, and today we're going deep into one of the biggest debates in the investment world: Bitcoin versus gold. Which one is the better store of value? To help us break this down in a clear and comprehensive way, I'm joined by financial expert Henry, who specializes in alternative asset investments. Welcome, Henry.
Thank you, Lisa. I'm excited to be here. This is a really relevant and important topic, especially in today's economic environment.
Let's begin with the basics. For people who are maybe just stepping into the world of investing, could you explain, in simple but thorough terms, what exactly gold and Bitcoin are and why they're often compared?
Great place to start. Gold is a tangible physical asset. It's been used for thousands of years as a form of money, jewelry, and a store of wealth. It has intrinsic value due to its scarcity, durability, and universal recognition. As of May 2025, the global gold market is worth around 13.4 trillion USD. Bitcoin, in contrast, is a digital currency created in 2009. It runs on blockchain technology and has no physical form. What makes it unique is its fixed supply. There will only ever be 21 million Bitcoin. As of now, about 93% of that supply is already in circulation. These two are compared because they serve a similar function in modern finance. Both are viewed as stores of value, especially during times of inflation or uncertainty. But they go about it in very different ways.
You mentioned that both assets are scarce, but in different ways. Could you walk us through what scarcity means in this context and how it applies differently to gold and Bitcoin?
Absolutely. Scarcity refers to how limited an asset is, and that directly impacts its value. Gold is scarce because it's hard to find and mine. About 208,000 metric tons of gold have been mined to date, but we don't know exactly how much is still out there. New gold is added to the supply every year at a relatively stable rate, about 1.5% annually. Bitcoin scarcity, on the other hand, is mathematically enforced. There will never be more than 21 million Bitcoins, and the protocol controls how new ones are created. Every 4 years, there's a halving event that reduces the number of new coins miners receive. The most recent one happened in April 2024. This halving mechanism slows the supply growth and makes Bitcoin increasingly scarce over time. So while gold is scarce because of geological limitations, Bitcoin is scarce because of code. One is natural scarcity, the other is engineered scarcity.
One thing that makes many investors hesitant about Bitcoin is its price volatility. Compared to gold, Bitcoin seems incredibly unpredictable. Should investors be worried about this? How do their price behaviors differ over time?
That's a very fair concern. Gold is known for its stability. Over the last 2 decades, its average annual volatility has stayed around 15%, and price fluctuations are generally moderate. Bitcoin, by contrast, is highly volatile. Its volatility often ranges from 60% to 80% per year, and there have been periods where it spiked to over 100%. Price swings of 20% to 30% in a single week or month are not uncommon. However, volatility doesn't automatically mean an asset is a bad investment. It depends on your time horizon and risk tolerance. For example, in 2013, gold was around $2,200 per ounce, and now it's about $2,300. That's an increase of roughly 90% over 12 years. In contrast, Bitcoin was about $100 in 2013, and today in 2025, it's trading at over $60,000. That's a 600-fold increase. So yes, Bitcoin is much more volatile, but also, historically, much more rewarding for early and patient investors.
Let's shift a bit and talk about global acceptance. How do gold and Bitcoin compare in terms of adoption, legal clarity, and how easy they are to access or use around the world?
This is a really important angle. Gold is accepted everywhere. It has a well-established legal framework. It can be bought, sold, and stored almost anywhere in the world. It's trusted by governments, banks, and individuals alike. Bitcoin is newer and still evolving in terms of regulation. It's legal and regulated in many countries, including the US, Canada, Japan, and across much of Europe. But in some countries, like China, it has been restricted or even banned. In terms of access and usage, Bitcoin has an edge. It's digital, meaning you can send it globally without relying on banks. For example, you could send $500,000 in Bitcoin to someone across the world in under 10 minutes, with fees often less than $10. Try doing that with physical gold. You'd need armored transport, insurance, customs clearance, and a lot more time and money.
Storage is another factor people worry about. Gold needs to be physically stored, while Bitcoin is digital. But both come with risks, right? Can you break down the pros and cons of storing each asset?
Certainly. With gold, you're dealing with a physical item. That means it can be lost, stolen, or damaged. To store it safely, you need vaults, insurance, and sometimes even armed guards, especially for institutional investors. Bitcoin eliminates those physical challenges but introduces digital ones. If you store Bitcoin on an exchange or online wallet, you're vulnerable to hacks. If you use a private wallet, losing your password or seed phrase could mean losing your assets forever. However, Bitcoin also allows for cold storage, which is offline and extremely secure. And advancements in custody services, like multi-signature wallets and institutional-grade vaults, are improving security dramatically. Each has storage risks, but they're just different in nature. Physical versus digital.
We've covered a lot of ground today. To wrap things up, could you share your final thoughts? What should people keep in mind when choosing between gold and Bitcoin as a long-term store of value?
Absolutely. If I had to summarize, gold is the traditional store of value. It has a 5,000-year track record, low volatility, and widespread global acceptance. It's a good choice for investors who prioritize stability and tangible assets. Bitcoin is the digital evolution of gold. It offers fixed supply, high portability, and the potential for high long-term returns. But it also comes with greater risk, regulatory uncertainty, and price swings. The smart move for many investors today isn't to pick one or the other, but to diversify. Hold gold for security and hold Bitcoin for potential growth. That way, you're protected in both the physical and digital economies of the future.
That was incredibly well put, Henry. Thank you so much for breaking all of this down so clearly. I think a lot of people listening will walk away with a more balanced and informed perspective.
It was a pleasure, Lisa, and I always say it's not about hype or fear. It's about understanding the fundamentals and making choices that match your financial goals.
Thanks again, Henry. And to everyone listening, don't forget to subscribe to Descript with Henry and stay tuned for more conversations on the future of money. See you next time.